The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Tiger Technician's Hour on this 11th day of April, and I'm looking out, beautiful blue skies out there. Fog is gone. Just a great day here in San Francisco, and it's just a pleasant surprise to have this kind of view. And what a nice meeting I had last night with folks from the TFNN crowd, our family of TFNN subscribers, people very interested in the ChapmanWave, interested in the hosts. Actually, that's what I love about meeting people in the various places that we go to. It isn't like people are just fawning over anybody. It's just everyone has respect for all the hosts, because each host has had years of experience and is able to generate ideas that many people haven't heard before in their particular expertise. It's really nice. So we just went yapping away for a good few hours, in fact, and just very grateful that Marriott was kind enough to help me put this together. Just a great team, really a great team, and a great team at TFNN for me to be able to do it out here, and just one person doing it, and with the back and forth faxing and email and all that, the TFNN headquarters, we were just able to make this go real smoothly. So once again, it was great meeting some of you that I haven't. I know your names, and now I can put the face with the name, and that was a wonderful thing. So I'm very appreciative. Now let's go to the markets. This is talking about appreciative. The Dow is up 62 at 14,864, an all-time high. The Composite Index is up 5 at 3302, lagging somewhat. The S&P is up 5.50, not as strong as the Dow. So I'd say be a little careful, just on an intraday basis. So be careful. I said to the folks last night that we were talking about all different aspects. I was talking about the market. I said I wouldn't be surprised if we see some kind of a doji today, because we needed to get an extra leg up in the 120-minute chart. So I'll go through all the numbers, and then I'll go there because callers waiting. So let me get going. So we've got gold is rebounded quite nicely. It's up 7 at 1565. It's a pattern. It's a really important pattern in terms of the H goes to an M to a rebound, because the gold contract right now needs very quickly, instead of being at 1566, it needs to get it has to hit the 1570s here to say that the decline the other day was more an emotional response to something that was going on, and it was an aberration to the trend, which is short-term up. Otherwise, it goes right back to short-term sideways to down. Silver, in the meantime, is up 0.06 at 2772. Platinum is up 11 at 1539. High-grade copper is bouncing a bit at 1.90, so it's at 343. And you've got crude oil down a little bit at 94.28, and bonds are up 5/32 at 146.03. We discussed that a lot last night. We went What's nice about these things, the same as the Master Trader series, what's nice about meeting one-to-one like this, as opposed to doing a webinar, which has its own benefits completely. But what actually is nice is the one-to-one, is it in a blink of an eye you can change from one thing to the other, or you can elaborate and take your time elaborating. So that part of it was a lot of fun. So now let's do this. And the dollar is down 45 cents because that was a rogue wave peak, that we saw the other day. So I want to explain something. In the Dow, this is leg C up in the Dow itself. What I wanted to show was, I need to go to the front page. Here we go, this page right here. What I say to subscribers is every day I do this extremely, even last night, late last night into early this morning, 4:30 in the morning. Anyway, that we needed to see a leg D in the 120-minute chart, and not only that, it was a cup and ladle, ChapmanWave cup and ladle breakout, which invariably goes to a leg D. All these different ChapmanWave methodologies, that we discussed, a lot of them were on the CD introducing the ChapmanWave methodology. And you got the Eiffel Tower breakdown in the VIX index, which is at 12.24, down 12 cents. And you've got the leg C up in the Dow. And I said, I can't There's no way to explain this. I can't even describe it. There's just a chance this isn't leg F, maybe going to a G in the S&P. This could be a brand new leg A to the upside. I don't even know how to discuss that. If this is just a brand new A at this level at a breakout period, it means that we're going up to about the last week of April. So look at this. This is the Dow Diamonds, the same thing. And you remember the expansion, that cone formation expansion? We're seeing it everywhere. So that's very important. So let's go to our first call. I believe we've got Dan in Miami. Is that Dan over there? Dan, is that you?
Yeah, hi, Basil. How you doing?
Hi, Dan. How you doing?
I want to take a look at the transportation average, the IYT.
Oh, absolutely. IYT. In fact, that's the only thing last night was discussed, and then I forgot to actually look at it because we were just so busy with many other charts. So now, is this a question in terms of just wanting to know more or less what's going on with the IYT, which is the iShares Dow Jones Transportation Average Index, or is there a position that you're actually in or looking to go into?
I like to trade oil from time to time. The 2X crude oil, UCO, over the last 4 months.
Okay, all right, good. So if what your implication here from the expression of your voice is that because you are looking at crude oil coming down, or it is crude oil has been coming, it ran up and then it came down a bit. How is this related to the transportation index specifically? I should imagine to the airline index, but since you trade crude oil, that's all peripheral to what you actually trade. Is that kind of summing up?
Waiting, and the thing thinking oil won't even correct,
So let me just go to if you don't mind, I'm just going to go to the USO. I find for just my purposes, I tend to get a better read on that. So the USO made a peak E in the ChapmanWave in the daily. The weekly chart really has that pattern I keep talking about, the one that goes to an H and then to an M. I just think crude oil is in a trading range right now, more tilted towards the downside than the upside. Is that kind of what you're looking at?
Yeah, basically, yeah, that's the way it looks.
Yeah, so if you trade the USC or USC, because I often look at the SCO, that's now let me remind myself, SCO is the ProShares Ultra Short AIG Crude. Well, now that is the same pattern. That's interesting. Oh, wait, yeah. That's interesting. So if this is 200%... Oh, yeah, ultra short, right? Why does it have the same pattern as the USO if it's ultra short? Let me just see. No, it's not quite the same. It's very close. I've looked at this and I kind of had the same conclusion just at this particular time that I like the TBT and the TLT. That's the TLT is the iShares 20-year T-bond fund, and the TBT is the ultra short. And I just think we're in a trading range for these guys. So the way I would trade this, what is today? Today's Thursday. Pity it isn't Tuesday, because I would have. Do you ever do options?
I don't know where.
Okay, you don't do options, because what I was going to say, this looks like a fabulous trade in the options where you could sell the long side and buy the short side, because the premium should just be shrinking and shrinking and shrinking as it just stays in this trading range. And that would be a great question for Victor Jones Tuesdays at 12 o'clock. So you don't do that. So then there's one way. I'm not seeing a trade here. If you're going to be playing crude oil, I'd rather be looking at a way to play the XAU. Which is not the XAU, I meant the AUL, XAL. XAL. I don't know if there is an index that trades the XAL, which is, did that just disappear? Yep, there it is. The XAL, which is the, and even that's, that's XAL. Gosh, trying to do things with one hand here, one hand holding a telephone and one hand, there you are. Yeah, you see the XAL, I think, has a better chart pattern. So, I'm going to make a recommendation, and that's a recommendation. I don't know if it pertains to your style of trading, but maybe look at one of the airline stocks which might trade will give you a better sense that if crude oil starts to pull back even $1, some of the airlines will have a good rally. But in the meantime, I don't see a trade here. I just see a trading range and a very narrow trading range. It could be that we wake up one day and there's some news and you've got oil spiking a point and a half or 2 points, or you get it coming down. But I don't see a trade right now. I do not like to push a trade. In other words, I don't want to give you a trade that I'm not seeing.
Yeah, I see. I understand. Yeah, that's perfectly.
I think you're feeling the same thing, right? It's just kind of stuck.
Yeah.
So then I'm going to recommend two things. One is wait, have patience. Wait, your trade will come, and the trade will be, and I'll just, if you don't mind, I'm going to go back to the USO because that's the core position. I typed in the wrong place. The USO is the, you can consider it the at least a really good proxy for crude oil. For the United States Oil Fund. Now, there are people trade oil and they trade the Brent crude. I don't know how they do it, but they're two different contracts, and they really look very different. So I don't want to get in there because that's just not my area of expertise. But what I will say to you, if the USO breaks underneath the 33.69, if it slips under 33.20, it looks like it'll want to test very quickly the low bar of 32.92. If it breaks that, then crude oil is going to pull back quite a bit more. And the weekly chart is saying there's a really good chance that my bias now would be to look at the short side. But you could be stuck with this in a tighter trading range for another couple of days before it actually makes a move. That's why I'm going to say to you, I'd rather wait, because if it does the opposite and it breaks out, if it breaks out above 33.92, that is the USO, it breaks above 33.92, then 34.05 is the 200-period moving average, which is likely to visit. But at this point, I'm only seeing 1 point moves, and my suspicion is the way you look at this, you really want to trade a good 2 points or more. Is that right?
Yeah, at least.
Okay, so I'm just going to say my bias is towards the downside in the crude oil right now. That's just a bias. But I don't really have any position. I'm going to say, hold off. Let's look at it again maybe Monday.
Right.
So thanks so much for calling. I appreciate it, Dan.
Thank you.
My pleasure. I think we've got Freeman in Dallas. Hi, Freeman. How are you?
Hey, Basil, how you doing, sir?
I'm doing very well, thank you.
Hey, Basil, I got a question about TEX. I was long this thing, but everything else in the portfolio is moving except for TEX. So what I did is I sold it this morning. I sold it to get out of the long position, and I shorted it. And I'm feeling like I did a revenge trade here. What do you think about it?
I like that. I haven't done that for a long time, a revenge trade. I like it. Just remember that TEX, which is Terex, isn't that Terex? Yeah, Terex Core. I don't think it's met you. Has it met you?
What's that?
I don't think it's ever met you. Has Terex met you?
No, not yet.
Well, just remember that. It doesn't even know you, so don't think of it. I agree with you. I think
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Folks, we are back. Went right into the break again, just didn't hear it. So we've got TEX. TEX is where we're looking at Terex Core, and we've got Freeman, who actually was long, and then he flipped to the short side, and I agree with him. Just there's one thing that you need to see, Freeman. You need to see that the candle, the little doji candle of on the 8th, the low of 30.47, and the stock's at 31.15 right now, down 42 cents. You want to see that taken out, and preferably by this afternoon, tomorrow afternoon would be okay. The sooner the better, and the sooner the better. Why? Because there's been a platform of support that it broke recently. It gave a bounce, and that bounce didn't even have strength enough to get back to the previous peak. That's the rule of this kind of arch formation that I have. That's number one. Number two is it bounced. It couldn't get over the black line, that 9-period exponential moving average in the daily. The weekly says decisively that if on Friday there's a close underneath 32.55, which is the 9-period moving average, together with the MACD and the stochastic, failing, that's the right shoulder failure in the stochastic. I think you have a fabulous potential for not just a trade, but a good 12 to maybe even 15% on the downside if two things happen. The first is Friday closes preferably around about here or low at 31, say 15, say under 31.22, preferably into the candle wick of last week. And even better if it goes underneath, because my target would be 25.84, the 200-period moving average, but it'll probably have to test 27 first and bounce to make another arch formation and then come down. I think you've got a good trade. I'm totally wrong, and you're totally wrong, and we can make it really easy because you've got a stop that is so tight. If it goes even 1 penny above the 32.40 high of the 9th, that's 3 days ago, I would say I'd be out of it, but I'm going to make it even easier because this pattern says it should be pulling back. And if it's able to get to today's high of 31.59 by the end of the day or tomorrow, then I'd say, you know what, it could just hang around a little longer. I would still stay in the position. I would actually I'd even give it 1.5 points because there's a chance that this can go down 3 points. It's a 1 to 2 risk factor. I think you've got the right trade, and I think your switch was absolutely timely. So I'm going to be watching this as, in fact, you know what, I'm putting it on my list right now. TEX, and let's see how it closes. But I think you did the right thing. And remember, stocks don't know us as much as we might know them. They couldn't care less about us. So it's never personal. It is your money. That's what you got to be thinking of. So hope that helps you, Freeman.
It does, Basil. I thank you very much.
Thank you very much for calling. Always appreciate it. And that was a good setup and a good switch, folks. You know, sometimes it's good to switch at a moment's notice when everything the light goes on and says, you know what, I was the wrong way. This is the way I want to go. And then all you do is you put your stop in. But it must be something that has the same veracity that you thought you had on the way up that didn't work out. Now you want the same thing on the way down and say, if this does something opposite to what I'm expecting, I'm out of it, especially if it's a short-term trade. Now, there are times, and I do this myself. In fact, we spoke about this last night. We've got a caller on the line. No, we've got someone in the den. Let me just double-check if that was the right question. The question was XRX. Let's see. That was Joe. Joe wanted to know about XRX. I'm looking at XRX. I'm saying, that is so XRX. I remember that. What? It's not SDX. It's not what? So I go XRX, and then right in front of me, well, I have to do it in the right place. Yeah. XRX, and then right in front of me is what? Xerox. I mean, just last night I was saying to the folks, I said, I believe very strongly that it's a period that's very similar to the 1950s. That goes to the fashions, that goes to the arts, that goes to the automobiles, that goes to almost everything I'm looking at. There are other repercussions there as well. But at the same time, I believe that foreign money will be coming back into the United States or coming to the United States as the premier stock market. And where will they go? They'll go into those famous name American companies, the Gs, the Fords, the GMs. And look what we get today, the Xerox. It's up 34 cents at 9.31, up 3.90%. And this is, I didn't have a chance to do that, 75. So that's D, and that's E, and this is either F or, once again, we've got a brand new move here, which is B leg B. I like it. I don't know, Joe, I need to ask you, are you long? Because if you're long, already long, then all I'm going to say to you is keep that as a core position. I would even consider, although it's leg D in the monthly, in the week. Oh, jeez, music.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. So we were just looking at Xerox. I think Xerox is breaking out. I think it's starting a nice move to the upside. At 855, there's a lot of support in the weekly, but my suspicion is 890, which is, sorry, I talked through the break. I'm just recapping here. I believe that this is actually a brand new move to the upside, like many charts we're looking at. Whatever it is, if you're along, try to keep the call long if you from the 880 area if you're along from there. And what I would use, keep that as a core, and I would use a trading position based on the weekly chart. If Xerox can push to, it's at 9.3, the XRX. If it can push over 945 to 962, the next pullback to 920, I would nibble somewhere around 920 to 918, maybe 915. I would nibble on a trading position. So I hope that helps you. And I think although it's in leg D, the technicals are really strong, and this should move with the market a little higher for about another week or so. So that's Xerox. And now we've got Ernie in Dearborn, Michigan. Hi, Ernie. How are you?
How are you? I just wanted to talk a little bit about Sarepta. You mentioned it the other day, and I kind of forget now if you said you got in or you were going to or whatever, and boy, it sure took off since that day.
I have a pattern that I look at, and it was absolutely the perfect pattern, and I made the stop kind of tight. I tend to do that with stocks that are very volatile. So
Sure.
we're in at 36.21 because it was a peak C in the ChapmanWave, and I made a stop 0.38 cents, so we took a 38-cent loss, about a 1% loss, And now, not only did it do exactly what I wanted it to do, I wanted to be in the stock as it broke out on its way towards the 45 area. We're not in it, but we've actually got a stock that made up for it. I don't want to talk out of turn, but we do have a stock that is up 19% today, so I guess we've got a little bit of we can feel a little bit okay about that. So, Ernie, do you own Sarepta Therapeutics?
Yes.
Good.
When you look at the bigger picture, and we have that high back there at 45 again, nice looking saucer type of pattern. What normally happens when and if we take out the 45, and what would be some projections either way, or would you look for some kind of handle in that area?
Okay, this is a fantastic opportunity to talk about a particular chart pattern, which I actually spent a lot of time in when I do my Master Trader series. Why? Because it's a pattern that gets repeated often enough. Not that often, but often enough that if you can recognize it, it is really important. It's one of the only ways when you've got these wild moves to the upside in a stock that gaps up, and then you say, oh, I missed it, what can I do? Well, that's the reason I wanted to get it, because it gave me the opportunity at a really nice entrance, 4 points lower, to do what I was anticipating. And that is, it's like a flag, it's like the classic flag pattern that is in all the textbooks where it's like a flagpole, and then you get this rectangle flag.
Okay.
Well, as always with techniques, I tend to take the technique and then make a derivative of it in my own work. And what that does is that when there are certain conditions that are met in a move like that, if the gap up is not filled, or it's just only partially filled because it goes just, let's say, gaps up, the gap low is 40 and it pops up to 45, then it pulls back and it goes to 39 or 38.70, but then immediately goes back into the rectangle. My rule of thumb is to go to a smaller time frame and see if there's going to be a Chapman wave, peak A, B, C, and invariably it will go to a D, maybe even an E. And the rule of thumb, this is like an upside-down H pattern. It's like the inverted Y pattern. And what I'm looking for is a retest toward, at, or just above the flagpole high. In this case, it's that 45 round number high. Well, we are now looking at it within a couple of points of getting there. This is the time that it's this is the time that it's getting a little bit dangerous, because you've got a D in the daily, which is a shorter time frame. You've got a leg D in the weekly. When I say dangerous, what I mean is it is close. Oh, and here's the other thing, what I had spoken about, that very long wick that we're looking at in the monthly chart. That, I find, is an extremely bullish chart pattern. And what I was looking at the other day, I'm going to give an example. Normally I wouldn't do this, but because we love to educate here, this is a pattern. That's one of the stocks that I'm talking about that we happen to own right now. It's Rite Aid. And that pattern, if you look at, where was it? Oh, this is only an A. Wow, that's great. If you look at the pattern of the candle, which has exactly the same candle yesterday as Therapeutics has in the monthly chart, because the candles repeat, they don't know whether they're daily, weekly, monthly. Look at that candle, inverted hammer, and look at the candle that you got. It's not exactly a hammer, but it's very much like a hammer in the SRPT is the symbol of the stock we're looking at, folks. Sarepta Therapeutics, Inc. If you look at the candle of more, not the weekly, which is an inverted Roman candle, ChapmanWave Roman candle, which wants to fill the wick. Look at the monthly. The monthly says, there it is, that's very much the same candle. So it wants to do with a long wick at the top, and it's trying to get to the top. So core position, what I'm going to suggest in this particular stock, keep your core position, but do anticipate that as it's getting closer towards 45, it could either stop at 44.20, it could stop at the most high, which is, in fact, what is it? 44.20. Well, it could stop somewhere, anywhere from here, and or it could go to 45.50. I'm not sure it's going to go much higher than 46.30 in this particular move, which you wouldn't mind at all, right? Another 10%. But what I am going to say is keep a core position, but have a tight rein on a trading position, a small position, and anywhere towards the top of that candle, towards the round number 45, I would recommend either tightening up your stop a lot, or even more importantly, maybe taking some profits to reward yourself and say, this is a fantastic stock, acting really well, good product line, good technicals. I want to put that money back about 10% to 12% lower, and that's the way you keep that. Your money is dedicated to SRPT, which is therapeutics, Sarepta, I always forget. Sarepta.
It's a heck of a name, isn't it?
Therapeutics. Whoa.
Yeah. Now the last time that we had that big gap up to the 45 area, a lot of people did not get out, of course. And now that we're getting back up in there, isn't this the old classic that you know that they're going to get out this time for sure? So it'll be very hard to get through the 45?
I suspect that pattern that you're talking about it just represents exactly what I'm talking about in terms of the ChapmanWave. It's called an inside buy mode. In other words, it's within a rectangle formation. It's going back to the top, and somewhere around the top it's going to pull back. That pullback could be sudden and scare the daylights out of people, but then it could stop dead right on the 9-period moving average because the monthly is building. So I'm expecting leg B up in the monthly, and 33.70 is the area of good support. So I think you got in at a great time, and all I would say is be a little careful as you get higher. Maybe take a little bit off, and you might want to put that or raise your stop. But that's only just a trading part of the whole core position that you have. Hope that helps you, Ernie, and congratulations.
Bye now.
I wish I had the trade. Thank you. Ernie in Dearborn. We'll go to Mike in New York. Hi, Mike. How are you?
Good. How you doing?
Okay. You want to look at what as we go to a break?
Repligen. They're
RGEN?
RGEN.
I'll be back in a moment, and we'll be back with Mike in New York looking at Repligen. Oh, look at that chart. Oh, keep going. Did I just see my engineer say keep going? He did. He said keep going, so I'll keep going. When you wake up that early, 4 o'clock in the morning, or if you're going to sleep at like 1 o'clock or something, things are a little different here in San Francisco. I hope I don't get that cycle. I hope I keep my Boston cycle because we'll be back very soon, and I don't get out of sync. So, Mike, we're back on. We weren't even lost. This is a fantastic stock. In fact, we were looking at a number of this is biotechnology, right?
Yeah, Waltham, Massachusetts, by the way.
Ah, that's right, Waltham, Massachusetts, next town over. So I just wanted to show this chart because I've got this with the left side, right side price time match. We spoke about this just briefly last night. Mostly what I wanted to talk about in this particular chart, there are some biotech stocks that are looking exactly like the high-tech stocks of 1999-2000. I still have a cup. I have a little dish and a little cup that has the ticker symbols of all those stocks. Some of them are not even in existence anymore on the rim. I love it. It's a little ticker tape, and it has Amazon and all the ones that were just fantastic. So what we're looking at here is that Repligen Biotech, RGEN is a symbol, is up 13 cents at 9.23, up 1.43%. But look at this chart pattern. It's just a beautiful chart pattern. It goes from a left side, right side price time match. It's 2 bars late, 2 months to break what I'd call the most important bar that I identify for the plumb line. And most importantly, what I'm looking at here is that this stock in a monthly chart, I just want to open it up to see where it was once upon a time. Let me squeeze this here because I think this really goes back. Yes, there it is. Look at that. Peak A, B, C, D, E, and it makes a peak F at $18. Round number, does everything that you want to see in the ChapmanWave in March of 2003, the very month of the NASDAQ all-time high, and then it plummets down. The most recent low was in 2004, down at $2.30. This stock has actually built a beautiful double cup base. It's actually a triple cup base, and I suspect that this stock is actually going to go quite a bit higher. I don't know if it's in this move or not, but the level that I'd be looking at is the high bar of April of 2000, and that was at $9.69. It's got about another 40-something cents to go, but it's only leg C in the monthly. So I don't know how to square that with when you're looking at, say, a Celgene, CELG, which is another stock we looked at last night, which looks very much like those biotech stocks, and it's just gone above the 261% expansion that I love to look at in the Fibonacci expansions. So let's go back to RGEN. Are you in this?
Yes.
Okay. So just with my thinking on this particular stock, it's a little different to some of the other biotechs, only in that it's doing the same kind of patterns, but it's at $9.22 instead of $99 or $199 or $299. It's in leg C up, as I counted in my ChapmanWave in the weekly chart. I'm going to recommend that you consider it's in leg E up in the daily chart. That's really not the issue because the MACD is still expanding. The stochastic's good. The on-balance volume is telling me we're getting real close to some kind of a pullback. So what I'm going to recommend, Mike, is that some part of your position, it's just almost the same as that I was discussing a moment ago with Ernie. Some part of your position, you don't really have to do it, but my thinking is it does so much for the psyche because it means you're using money management. You're not putting all your resources into it continuing to go up and then being stuck with your full position when it comes back down. I'm going to recommend within this area from 1922 up, you have a trading stop, make it fairly tight, or you just say, hey, right here, and let me the 120-minute chart. The 120-minute chart says, I can't do the wave count, but the 120-minute chart says it's really close to at least a minor pullback towards the 9 area. Well, from 923 to 9, it's like saying a $92 stock going to 90. So it's not a big deal. If you're in for the long term, you might not even want to bother about it because I think it's going higher based on the weekly chart and the monthly, which is in leg C. So I'm going to make the recommendation that if you want, you can take a little bit off, almost as if it's part of the process of you managing your trades, and that little bit is dedicated to being put back. You can even just put it in as a good until canceled order between $8.50 and $8.20. My actual price that I think would be great would be $8.30. And good till canceled. Why? Because it's almost $1 lower. That's number one. So you've already gained $1. If it moves up, you've still got your core position. But if it pulls back, based on the weekly chart, all that would happen is that you're beginning in at about 8.35, 8.30 or something like that. And yes, it could go down to 7.70, but the magnet of that leg C up in the weekly and monthly says it should come back to your entry price in that trading position, and then it should go even higher. So it's a risk of being wrong for maybe 40 cents or $1.40. And my suspicion is that if it does pull back, and a lot of these biotechs are really close to taking a bit of a timeout in their weekly charts, and I suspect that this is going to be one of them, but at this particular price, $9.21, I'm only talking percentages. In other words, a drop to the $8.29 area is almost $1. That's a 10% pullback. I would rather have the 10% put back so that if you put it back and it really works out for you as you're going higher, you've got an even bigger cushion. You can use a bigger trading stop on that trading position when it moves to a leg D. Hope that helps you.
Yes, thank you very much, Basil.
Okay, and thank you so much for calling. Always appreciate you calling. You got a good eye for some very good stocks. We just had some great callers today. Always have great callers. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, everyone. Basil Chapman. There was a question in the den earlier that I think I missed, and I'm sorry about that. Then there's a question that says, Basil, tell us about the South African government and banking transformation. I have not lived in South Africa for a very long time, so I can't tell you anything about that. I also have a question here in the Den. Den is a fabulous medium. This is what I take a walk yesterday. So I do the show, and then I wanted to just freshen up my mind. So I take a walk, and I walk around. It's really pretty around here. This is, I guess, I'm not sure exactly which section this is. And I'm going down Market Street, and I'm walking, and then I just take a walk, and there's a beautiful park, and I go past the park, Union Square. Then I go around, and I stop. I just, out of curiosity, I stopped, and there's this one store, men's clothes store, and I'm looking around, and the young man comes up, and he's smiling away, and I say, okay, hi, talking, and chatting. He says, so where are you from? I said, I'm here from Boston for a few days. Oh, he says, I'm from Cambridge, Mass. Oh, isn't that nice? So, and I'm looking in the den here, and we've got a little talk about Brandeis University and Waltham, and it's just such a big coincidence. Turns out that this kid, his mother taught at MIT, and then she went to teach at Brandeis, and now she's back at MIT. In 2 days, suddenly the word Brandeis, which never comes up, suddenly comes up. I love that serendipity. Then I was asked about Microsoft. So we'll go to Microsoft now, and there was another question. I don't know if I got my 30-minute chart here. Just take 1 second if I can find it. 15. Look at it here, and then we'll look at Microsoft before Larry Pesavento comes up. You know, with all these commodities and things, this is just a great time to be listening to the experts on those. Larry Pesavento. So let me so there it is, NQM. Quick check on this, if I can find it right there. One quick check to see where, rectangle formation in the NQM. My suspicion is it's going to be pulling back from here. This is a 30-minute chart. I haven't got it updated. It's peak A, B, C. It's like a C1 or C2, or another one, A, B, C, D. Okay, so that is a top, and it's like a rectangle formation. I suspect it's going to pull back. I think that was the question, and my guess is we're still going to close lower than we are right now. But and then maybe pull back tomorrow a little bit. But Ford, look at Ford breaking out. I had it on my opening call today as a buy, but I wanted to pull back. Of course, stocks are not pulling back to give you that entry point. Ford just takes off, puts its foot on the gas, and whoop, it's broken out to a leg D or perhaps a brand new A. So many stocks are doing this. I think we're going higher. I don't want to tell you. It's $13.48. F is the symbol, up 35 cents. Moving without us. I'm very upset. A big cup formation in the weekly now, Microsoft. MSFT, I think that was the question. I hope it was. Oops, I typed it on the chart by mistake. I want to run out of time here. Microsoft. And, folks, I had said that I wouldn't be here. I'm going to take off tomorrow. It's so early in the morning. I have nothing else to do right now at this particular time. Here in San Francisco at 8 to 9 in the morning, they don't even open anything till later on. So I will be here. I'm going to do the show tomorrow. After what else I'll be doing? Just sitting here saying, oh, man, I should be doing the show. So Microsoft has had a pullback here. Oh, this is leg D in the weekly. I don't know what's going on with Microsoft. It's having a terrible time sustaining rallies. So what is the question? The question is, where is it going? I think it's now setting up for this is that pattern that we looked at before. I think it's going to take a consolidation, and then a little later on, it's going to have an attempt. Oh, the high this week is 30.32. It's trading at 28.80. It's going to take a while before it tries to get back to the top of this particular bar. But I suspect it's going to find support between 28.29 with the 27.69 worst case in this particular move right now. I don't know why it's gapped down, but I can tell you this, that if Microsoft closes decisively under 28, either tomorrow or the following Friday, and I mean if it closes in the 27.30 area, 27.20, that's just not a good sign. So if you're long, you have to treat it as a possible dividend stock. Oh, I'm sorry, guys. I did go over the break, but I'm okay. So Microsoft, I wouldn't tell